Let's start with the Fed minutes, because I feel like I should have mentioned this more. We should have mentioned this more yesterday, that the Fed minutes were coming. They turned out to be more exciting than perhaps they usually are, and that when everyone was looking for the Nvidia numbers. So what did you make of the tone, the slightly more hawkish than expected tone we got from those Fed minutes?
Yes, Anna, you were not alone. All of us were pretty much dismissing the minutes as being market moving. And in many ways, they were the more lingering impact from yesterday rather than Nvidia earnings, because we didn't get the big shock in Nvidia earnings. The Nvidia earnings are backing up the kind of underlying story, which is a bull market story built in this AI pillar, strong growth. There's still inflation out there. But it was really the kind of minutes which kind of said, hey, wait a sec. And the reason they did that is because Powell, not just in the press conference at the Fed decision, but in his subsequent speeches, he kind of seemed to rule out the idea of rate hikes. And suddenly these minutes come out and say, that seems a little bit bizarre. It is very clear that Powell's reaction function is more dovish than most of the rest of the committee. And I think we knew he was the more dovish end. But what was interesting from those minutes is that there's a little bit more implication that he might be losing this kind of battle to kind of lead all the troops in the same direction. And again, this reiterates what we've talked about earlier this week. The idea of rate hikes should stay on the table in the US and will come back on the radar again later this year.
What do we look at from here then, Mark? What's the market focus? We've got PMIs coming out from various parts of Europe. We've got fairly relaxed market reaction to the announcement of a snap UK election. Where's the focus for the global audience?
So I think that because we got beyond earnings, I think next week, like over the next week or so, it's really crucial that the kind of key data about is there any kind of real softness coming through in the US economy? Because if not, then the rate story has to reprice higher. And not just in the US, but the Fed will lead it, but pretty much around the world. Maybe Europe's a slight exception, but everywhere, I think there are still too many cuts priced in unless there's some severe kind of growth slowdown coming through. And that's only going to come through the US consumer. So I think from here on out, we stop watching the micro earnings data and we start going back to focusing on the macro consumer data.